Audio morning brief for the U.S. stock market. I'm Rich Possum for Critical Point, and it is January 4th, 8:14 a.m. Eastern Time. Market is preparing for the jobs report tomorrow, and we got the PMI report on manufacturing, but I didn't see anything there to talk about. I want to see the services report that's coming up sometime in the next few days. Okay, where are we at for the very short term? The model's saying the market should have bottomed yesterday for level 4. We have 3 out of 4 scenarios saying bottom yesterday or will bottom today. And it ought to bottom sooner rather than later. Unfortunately, there's 1 out of 4 scenarios saying the market could very well go lower into tomorrow or at least stay down today and then is just up tomorrow. Something like that. Now, the level 4 are the intra-week swings. Sometimes they're just the larger intraday swing. We use them to assist with timing of the next larger trend, which is the level 3. Now, the level 3 is a monthly bottom, also a top. Sometimes a little more complicated than that. And you can view it as some kind of monthly buy-sell signal even for very short-term traders. The model's looking for a level 3 bottom now, and there's some scenarios saying from December 20th, as well as from a point prior to that, that this is the latest allowed. It ought to be bottoming now for level 3. However, there's a scenario from December 20th, and that was that strange down day that few could seem to explain. That allows into early next week. So unfortunately, anywhere from today into next Tuesday, maybe Wednesday the latest, we're looking for that level 3 bottom. A clue of a level 3 bottom would be an up day, a nice up day, all right, closing higher, all right? Something that might give us a clue we're on our way to that is to trade above yesterday's high at 4729.29 for the S&P 500 cash. Now, at the same time, however, there's risk of 4680 to 4660 here for the S&P 500 if they want to extend this level 3 downtrend lower. And there are some people thinking that January seasonally, if we don't have a good Santa Claus rally, January is normally a down month or it's a go nowheres month. But there are others, like myself, who think we're going to get the worst of the selling out of the way early this month, and then it can move higher. And some of those people that are showing something negative for this month point out that there's still other studies saying this can be a great up year, and we can also have a normal seasonal up move into summer. All right, so we know there's still lingering downside potential. They can sell, but we know that the model's saying we're already getting to a point here that we ought to have a bounce by next week. Unfortunately, we can shove that out a little bit and delay it. We got to allow the possibility of a little more downside first, and it may have something to do with tomorrow's jobs report, okay? Now, this level 3 bottom is rather significant in that this is the ideal time for a more important level 2 bottom. And that occurs like 4 to 6 times a year. And it's the most important kind of bottom, not the most important, second most important kind of bottom during the year. So this is the ideal opportunity. And so we have to take it that, you know what, maybe this selling can dry up here very quickly, that there really wasn't that much selling, and the market's then going to move higher into February. Now, in late January, there will be a level 3 downtrend again. And it can either be a small downtrend because the market's overall moving higher into February, but if it were something more significant, then we may find that's the true level 2 bottom. So unfortunately, we have 2 opportunities this month to place the level 2 bottom. It's just a matter how long it takes to consolidate this market, get over some of the run-up late last year, get over the discouragement that the Santa Claus rally didn't work as well as they'd like, and to get some of this data out of the way and maybe worry over at the end of the month for the Federal Reserve. Both scenarios, depending on which one, where the level 2 bottom comes in, both scenarios still point to a higher market in February. And I think we're seeing some of Wall Street pointing towards a chance of higher into February still, even though we got to deal with this current level of selling. So if we can get it to show us some strength, give us an up day, it's quite possible it's more important than a level 3 that we get the level 2 bottom. Now, in terms of how level 3 trends work, if you want to simplify it, what would be a sign of a level 2 bottom is we actually have an up week. And it's just a matter, if you're waiting on that, do you want to miss out of that upside? So give me an up day now into early next week, probably a level 3 bottom, probably should take a chance that it's a level 2 bottom. Give me an up week anytime this month, we probably got a level 2 bottom. And for the moment, it doesn't look like this market should move down by huge amounts, and I'll explain that in the weekly update that I'm going to do this morning. It's met minimum downside targets for that level 2. Unfortunately, it's only the minimum. So there's still things that could go wrong, knock this market down for a while, but I'm not coming up with the idea this is a down month. I can't go there, okay? So now we'll just see whether we can get some strength out of this market here, and I like how the futures are behaving. Now, as we move over to the interest rates, I am concerned the interest rates can give us a bit of a problem here into next week. There's two scenarios saying interest rates will be down by next week and one saying be up, and we just don't know. So we'll give it a chance here to see where we go today with this interest rates and how the stock market respond to that, because it does seem to be not correlating as often as it used to. Positive correlation. At any rate, if we can get the futures to trade into the upper 4760s today, I think that's kind of constructive action. And if we can get it back up into the 4770s, that'll be more support of some kind of potential bullish stance here. So I'll stop with that and just saying, yes, I realize the level 3 trend is down, but it's looking like the downside ought to be limited. It's looking like this market ought to put in the bottom here now in the next few days, and it could turn out to be something more significant that leads to a rally into February. Past results are not necessarily indicative of future results. Have a great day. Thank you.